The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here on this 27th day of February, and almost wrapping up the monthly candles. It's going to be very interesting. Not sure there's enough time for the Dow or the S&P to make new highs, and that's going to make a peak in the monthlies. We'll talk about that. There's a lot to talk about here. Let's just run the numbers. The E-mini right now is down, down 18. Yeah, down 18. I've been following this so closely, but actually I never looked at the number that is down. So 2766. There's a real good chance. What I said to my subscribers to my opening call this morning, right here, let me show you. I said if the Dow's down minus 50s at 11:10, 10 minutes past 11 Eastern time, there's a real good chance that we will be forming, very close to forming a peak C. If it happened immediately, it would be a peak C with no new high today, but we normally made a new high today, so it has to wait until tomorrow to see if there's some weakness to make a peak. How far down we go here is going to be very important. I'd say that 25,630s and 630s are going to be very important. We could even go to the 25,570s. That should be very good support. We'll see what happens. So that's in my daily newsletter, the opening call. Now let me go back to this. The E-mini had a cup and handle potential, but then it looked like, because it broke right out from the left side lip. Let me make this bigger. It's worth just taking a moment here. This is like a technical Friday session because there's just so much going on. That peak F that was made in the Chapman wave methodology, ooh, maybe I have to do something else then if I mention peak F. Let me just say, in the Chapman wave methodology, for those of you who are new, I try to identify the most important lowest low on the left side. Then you merely count each successively higher peak. You alphabetize them, uppercase on the way up, lowercase on the way down. You can go to a G, but it's at the fourth highest peak, peak A, B, C, and then D. Peak D is where other things can happen. It could be a recycle. It could be an instant restart, Chapman wave flat base restart, a whole bunch of things. Not the issue. The issue is, how does it work in real life? Well, here you'll see the E-mini on the 15th of Feb, 16th of February, made a peak E, pulled back, went under the 9-period moving average, then spiked suddenly to 2754.75. Peak F is what I would call a rogue wave here, a sudden peak F, which usually starts to fail, which it did. Goes all the way down to the 2680s, and then all of a sudden starts to new move, and that move created a cup formation. It's more like a ball in this case. And there's a technique that I developed years ago that said, if there is a move above the left side lip, that would be 2754.75, and it's very quick and it powers through, it's what I call a cup and ladle. You know how you got your cup formation and then you got that long ladle? Well, that ladle should take you to at least a D, could even go higher, and then you've got to look for the handle to turn down, which is exactly what it did. And then there was that sudden spike soon after the open, and we went to the high today of 2789.75, 89.75, and now we've pulled back the deepest correction so far today. So that says, in this particular technique, very often in the cup and ladle breakout, the return price can see a move back to the breakout. That would be 2754. I don't see another 200 or 300 points in the Dow, but that's usually something that I'd be looking for. But if it holds above that at other support levels, That would be very important. All right, enough with that. Here we go. The Dow, INDU. Dow is down 62 at 25,646. Leg C, the MACD is good. The stochastic daily is good. Still not great. It's not even at 80%. It's at 79.98. It's very close, but it's improving. On balance, volume is excellent, but pulling back a little bit here with the weakness. So this is the uptrend, which has a V-shaped formation. It'll remain in the V-shaped formation. It should even go to a D to the upside, unless this particular support right here, 25,450 to 25,400 breaks. The weekly chart, this is always the most difficult pattern to interpret. Very often we actually have made a low that turns out to be the low, and it goes higher and higher in the weekly. And I have to start off with a little X. I can't yet put the X in because the stochastic is only just now turning down. And this is a weekly chart. I have to wait until Friday. But in the meantime, what we're looking at here is that I had a couple of questions which I should try to deal with, and we'll do that. We'll come back. Let me just finish all the numbers first. And that is, could there be an arch formation? What would say that the 26,616 high that was made on the 26th of January is a very serious high, and then we're going to go test the lows? It's the H pattern. And just make it simple, under the 9-period moving average of 25,250, a close under that, probably two closes under that would say to me, uh-oh, be careful, big stalling formation. So SPX.X, that's the S&P 500 index, has broken the smaller H pattern. Now I'm just going to show you that it could be a larger H pattern. I like to say two fighting patterns. And in this case, you've got the support right here. That's going to be very important. And that support says if the S&P down 12 right now, this is the cash, takes out 2746, watch out, because the 2734 9-period moving average is next. But it made a new high today. Still a leg C, still a very good action. MACD and stochastic have improved a lot. Weekly charts real tough, and I'll try to get back to that soon. Let's go to the QQQs. New recovery high, but not an all-time high. Just missed it. 117.95 was the high of the 26th. Today's high is 170.73. 12 cents. 22 cents. It feels like nothing, but you know what? If you don't make the new high, you don't make the new high. Until you do, this is like a double top formation we're looking at. But in the weekly chart, that did have a spectacular move, rebound, V-shaped pattern. I'm always nervous about V-shaped patterns. The only way this V-shaped pattern is going to be really bullish is if it spirals into the 172s, holds there. It's a weekly chart. But on the daily chart, if it goes there and holds for about 2 out of 3 sessions, I'm going to say we've raised the base. That's a very nice, important breakout. And 168 will be very important shorter-term support. Let's go to the IWM. It was much weaker. It went to a leg D, and it's pulling back from the D. This is where an arch formation, I'm going to draw this in right here. This is where we have to watch very closely. I do not like to have this kind of divergence where the generals are leading the way and the soldiers don't even know there's a fight going on here. So we'll talk about that. We'll talk about gold, silver. We'll do platinum. We'll do copper. We'll do crude oil. We'll do the T-bonds straight off to this break. Dow's down 78. S&P's down 50. I'll be back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, everyone. A couple of the reasons why I wanted to show you these charts and to show you that it's really important to have some kind of unison. That includes the transportation areas, the foreign country major stock indices. For instance, I'm looking at the Dow German DAX. So this is the Germany, it's called the Dow Jones Germany Stock Index. Look, it made a top on the 23rd of January, a few days before the our market on the 26th, the Dow made its top at 453.30. It pulls back to just over 400. That is a very big move down. And now it's only rallied to the 200-period moving average in leg C, probably peak C today. And look at the monthly chart. This is not good action at all. And a leg F in the monthly chart. Look at the GB is the Great Britain. So this is the Dow Jones UK Stock Index. Same thing. Makes a high on the 16th at 248. Pulls back to the 318s, 317s. Big pullback. And then what does it do? It tries to rally. This hasn't even gone to the 200-period moving average. So if I show you the context, look at the New York Stock Exchange. New York Stock Exchange has gone to a leg C, but it hasn't even made maybe it's made almost a 50% retracement. But that's nothing. So I'm saying that there are a couple of divergences here. You got the Qs looking absolutely fantastic in a V-shaped pattern, but the V-shaped pattern for me has a number of things that I've taught in my workshops and my CD introducing the Chapman Wave methodology, and that is the V-shape. You should have a much greater impact by powering through the left side lip. In this case, 170.95 in the QQQs. And then it has to close well above that to say, I'm done. There is no double top. So this is an area that if there's a stalling of at 169 to 171, that's going to be a big deal. Now, you do have the XLK, which is the select tech sector, which has gone to a leg D, gone to a new high, 69.71. 69.19 was the high of the 26th. So it's gone above, but so far it hasn't closed above. So we're going to be watching this. It's gone to a leg D now. I'm calling this a D in the weekly chart. I don't think I can call it an A. I'm calling it a D. And the monthly chart is still very bullish in C. So now let's look at the semiconductors. Semiconductors lead up and lead down. They made new all-time highs today. leg C, it could be an alternate count because it picks up the old D since it started the new buy signal and buy mode. Oh no, it went below 93. So this has to be a C. So it should go to a D over the coming days. All-time highs rarely fail, very, very seldom at a C. And the weekly chart is, I'm calling it an F just for now. Monthly chart is still good in leg E. So the SMH's semiconductor ETF, the market vectors ETF is at 107.55 down 24. So we have to watch this closely. Very good action so far. If I look at gold, gold was down some. It's now down a lot more, minus 16 at 13.16. This is not good action. If you look at silver, also looks like it wants to retest the lows of earlier in February. It's at 16.37, down 25 cents. Not good. That's what I've been saying all the time, that I don't see a major crash or anything in gold, silver, but it looks like it wants to test more the bottom than the top part. If you look at the dollar all of a sudden is showing strength, and it's in leg B to the upside. Now, it's done this before, and this is a recycle. This is a new leg D to the downside, and then it goes to a leg B on the upside. That's nice action. Earlier in the day when I was on with Tommy Jr., because Tom O'Brien is at New York at the Marriott Marquis at the Traders Expo. I believe he's giving a talk right now. He has just given a talk, so you can visit him there. But right now, you're looking at the USD JPY, which as we were doing the show earlier on, I said, Tommy, that there's the way of looking at it, that if I look at the yen based on the USD JPY, there's a left side high of 107.602. If I draw a cup formation with the left side, right side price time match, it should take us to that 107.60, and at the time at 107.30 something. And then boom, as we were talking, it just went. And what I'd say to him, if it gets over 107.50, that 200 period moving average that had been a tremendous resistance would become a magnet. Well, it goes right to the door. It just hits it, 107.67. And there you can see 107.67 is the number of the 200 period exponential moving average. Now it's pulling back a bit. So very interesting, huh? Meantime, back at the ranch, if you're looking at, there we go. So the yen is acting quite well. The euro is not acting well. But the yen is not acting great. It's acting quite well. It needs to very much get to the 108.70, 109.20 area. Then I'm going to say, hey, that's nice action. So my concern has been, and one of the reasons why I didn't go extremely bullish, we are long the Dow from the day after the low that was made. We're trying to set up some positions, long positions that I think are more infrastructure. They sort of under the radar. Not sure if they'll all work. Most importantly, what I'm looking at here, how do the next couple of days act? Because if you look at the TLT, this is the Lehman iShares 20-year Treasury bond ETF, pulling back sharply at 117.37 down 80, and the TBT had made a peak D. But look at this nice rebound. And what I'd said was, I just see a minor pullback, maybe 5 days, a week or something. But if I look at my weekly charts, look, this is the weekly chart of the 30-year. The high was 32.21. Took out the high of 32.01 back in the week of the 20th of March of 2017. This is almost a year later. And it pulled back a little bit, but now it's up 40 cents at 31.95. The 10-year, the brown TNX, made a leg D. It could be still a leg D if it makes a new recovery high this week above the high of 29.43. Same thing with the CWAPs, the CY, the cyan-colored FVX 5-year had a high last week of 26.79. It's at 26.82. No, come on, check that out. 26.82, 26.79. It's just, this is a leg D. Bullish for yields. I think yields are going higher. I think there's just a momentary pause here, and I think that could affect the home builders. Certainly, we've got a short left, one short left in the home building sector, and it's gone from the 33.5 area where we shorted, down to it's under 29 right now. Now look, the Philadelphia Housing Index is making the H pattern. That's not good. And the wood, which is the iShares Global and Timber Forestry ETF, rallied with a V-shaped pattern, but it hasn't tested 77.99. Got real close. It went to 77.87, 12 cents less, but it hasn't taken it out. I have to tell you something. I'm not as sanguine as the perma bulls are at this particular point. I'm looking at this and I'm saying, I'd say to subscribers, we're going to start, end of the week, we're going to start looking at the short side. I'm not there yet. I still want to see a culmination of a leg D to the upside, hopefully in this retracement pattern in the down, the S&P. So we've not gone into crude oil, which is down a little bit, down. Now it's down a lot. It's down $1.03 at 62.89. I'll be right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
It's a special month at TFNN, and with market volatility back, we've decided to hold an open house in our Tiger's Den. For this month only, you can get a full 30 days of Tiger's Den membership without paying anything. The Tiger's Den is our interactive chat room where you can chat with other tigers and tigresses along with the TFNN hosts during each of their programs. For all of the details and to start your 30-day free trial to the Tiger's Den today, visit the front page of TFNN.com before this deal is gone.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. So what we're doing here, we're looking at the ARCA Airline Index trading at 119.96 XAL. It's down $1.67, and that's with crude oil pulling back. But it was a very nice bounce, and I'm not yet prepared to dismiss the fact that the IYT hasn't yet broken the downtrend line. The weekly chart sort of stalled and holding the 9-period moving average. Monthly chart has made a leg E, and I'm pretty sure it's going to be a peak E by the close of this month. Well, we've got a day or two left, day left. What I am looking at is the fact that the IYT did rally you had some very nice action in a couple of the areas within the transportation index. But the fact that it didn't really move to the 196 area, actually, really, it needed to get to about 198. And then I'd say, yeah, that's good action, not great. So this is not good enough for me to say that everything is in sync, that I think we're going to scream to the upside. It is very selective. If you look at applied materials, made a new high. It's in leg C. It's actually probably going to make a peak C here. I'm watching this a new recovery high. All-time high was 60.89, week of the 17th of November, 2017. There are a couple of things here that I'm looking at and I'm saying, nice, really a fabulous rebound in the quickest time. So I need to put it together. One of the reasons why it's beneficial, if you're able to do it using timing, to go long closest to a bottom or short closest to a top, is it just gives you some flexibility, because you always get these 1 or 2 day aberrations of the trend and they take you out and you can't get back in. So fortunately, we are long from way down around about the 24,050 area, 24,500 area. So that's over 1,000 points. That gives some comfort. And so I'm looking at this and I'm saying, I have ideas where the one-to-one expansion of this Chapman wave falling axe could take you to. And that's above 26,800, even higher, 26,900. But I have to see the evidence of how the 9-period moving averages holds at 25,245 if we have further weakness of more than a day or two. So I like to be a little cautious. In my mind, I'm saying this is a mega bull market. It is still a mega bull market. I don't see anything yet to change it. We haven't had the socioeconomic, political exuberance that I would expect. And I'm expecting that it's going to be a worldwide phenomenon. And we're not even close to that. On a minor basis, we did see the high that was made in the 26th. That's where a lot of over enthusiasm was. You could see it everywhere. So we had a 12% pullback in the Dow, an 18% pullback in the QQQs. Much of the work is done. I still have to think of this as internal low. Is it a V-shaped pattern with no residual low, going to new highs in the shortest period of time? And that would say by the 7th of March, we need to be at an all-time high in the Dow. Or is it going to have some kind of news event where the VIX, which is trading now at 17.88 up 2, is going to be very impactful. Another thing that I've been looking at is, why did the VIX not drop as sharp as it has on every other occasion? Look, it's trading in 17.85, well above the 200-period moving average in the daily of 12.94, and under the 19.18? It's under the 19.30-ish area of the 9-period moving average. But up here, for this amount of time, says there's still some nervousness out there. Fund managers are buying the VIX. So, okay, I've gone through a bunch of scenarios. Let me just do this because what we need to look at here is I got a bunch of questions. So high-grade copper pulling back sharply. I was going to buy a copper. We had a copper stock that had a huge gain, and then it got hit, and we took like a 2-cent gain, and then a break even for a 0 gain on the second position. And I was going to buy it again. I said, no, I don't like it. It looks to me like commodities are actually under pressure. Although there's a lot of talk about commodities coming back, I think the commodities are showing us that it's some other things that are of interest, may I say interest, that at this particular point. So I pulled that away. I don't want copper, and copper's acting very poorly. So thank goodness. If you're looking at the XLF, got questions about the XLF, JP Morgan, etc. Leg D. This is a very good move. I'm always a little nervous about a peak D that's made under a previous high. Why? I want to see an instant restart. I want to see upside activity really quickly, because if this takes 3 to 5 days to get at 29.56, to get above 30.01, that's not going to be good news. that's going to say, uh-oh. And now I'm also looking at this and I'm saying, wait a minute, don't the bank stocks just love higher rates? What's going on here? Why is this not? Why is the XLF and the KRE, why are they not? KRE right now has gone to a new recovery high. Leg E in the weekly chart, extended leg F/C in the monthly chart, acting much better. And that's saying to me that the regionals, you cannot take your eye off the regionals, because this is the SPDR S&P Regional Bank Index. Here's your A, here's your B, brand new move. Whoops, is that a double top right there? 50-50, yes, it is. So that means you go on, B, to leg C. Bank stocks are still a bank index. The XLF is looking good, but the KRE is looking even better. Finally, it was lagging for ages. Regionals are acting better. That's talking about maybe infrastructure is going to be improved. So smaller banks with smaller towns making better loans. Maybe that's happening. Goldman Sachs trading right now in leg C 271, acting quite well. Good sign, up 22 cents, up 30 cents, up 37 cents. Somebody heard us. Up 42 cents, up 48 cents, up 49 cents. What's going on? Somebody listened to the show at 271.75. Yeah, it hasn't made a new recovery high, all-time high, and that would be above 273.79. That was the high that was made about 4 weeks ago. Now, what I want you to do is ITA. Oh, this is the aerospace. There was a question here from GT. ITA, Boeing, Lockheed Martin, Raytheon into defense. I usually use the PPA, A, B, C. This is in leg D with the doji candle right now at an all-time high, 205.75. But I usually use the Power Shares Aerospace and Defense ETF. So that's made a peak D top. There's a new buy mode up. And now what we've got, almost, a single leg to the downside. That's incredible. So now you've got a peak A, peak B, peak C, and a leg D, just above the previous high. Very important period we're in for the aerospace sector. And they've been on an absolute tear. And this is A, B, C, and we went lower. Oh, this is going to be so interesting. This is a ABC. I need to do this. The PPI. I need to do the weekly chart because we've got a little problem here. I'll be right back. Basil Chapman, Tiger Technicians Hour. Dow is down 70. S&P's down 40.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
So, yeah, I'm going to spend some time on that, on the PPA chart. That's the aerospace and defense, as well as the ITA. But Boeing has gone to a new high today, an all-time high, 369.18. And it's leg D in the daily, leg D in the weekly, and leg E in the monthly. It's getting kind of overbought, but it's still in a sector that's very desirable. Question I had about JP Morgan, JPM. Okay, I haven't updated this. That went to a... Okay, let's go on to a D in the daily. Alternate count, this has to be a G/C in the weekly, nothing wrong. I'm just saying it's an alternate count, but so far nothing wrong with that. G/C in the weekly and the leg C in the monthly is still very bullish. So JP Morgan leading the way. So trying to get to these questions. Vail, let me see where Vail is trading. Vail had a very nice A. This is acting very well. A, B, C. It's at a peak C. It should go a little higher. So Vail is down 22 cents at 14.43. This is a Brazilian iron ore producer. Leg C in the weekly, monthly chart. Maybe it's recycled. I'm just calling it F/B in the daily for now. So it's still very strong. Getting a little toppy just based on the extension of the price and the. Let me just open this up. Okay, the big resistance will be the high that was made in July of 2014 at 14.93, and so far the high is 14.67. Very close. This is one of the better of the different materials. We're looking at a question about BAC, Bank of America, which we are long. Beautiful leg C up at 32.64. Yep, we remain long. Very nice. Leg D, I'm going to call that a D in the weekly. So it's C in the daily, D in the weekly, and D in the monthly. Question I had about CSX. Yeah, this is what I'm looking at. You see this A, and it goes to a B. This is good action, but it's not great action. So the high that was made in CSX rails back at 60-ish, 60.04 on the 16th, 60 goes down to 48, 48.43. I would say that a 12-point decline, a 12-point decline, wow, that's nearly 20%. Yeah, this is a bounce, but a peak E in the weekly. I'm looking at this and I feel strongly that this is sector related. I like the fact that we are along the Dow. I think the Dow is acting really well, but it's not acting great. It's not leading. The QQQs are leading in terms of the big sectors. And that's important. That I want to see if this is a catch-up where you suddenly see within 2 days, you're back to just big moves to the upside. That's exactly what you want to see. If there's just a chop, chop, chop sideways move and one sudden 150-point down move, and then kind of 60 up, and then another 100-point down move, that's going to say getting a little tired, needs to do some retesting. Then we've got the earthquake and the aftershock scenario, and we'll see if that works out. So those are questions that I had. Oh, a question about X. So I did that yesterday. Said it made a peak E. It's stalling right here. Yeah, I'm still saying that it's acting very well, but it is stalling. And no, I'm just going to say acting well. It's in a little bit of a stall, consolidating. I think it's still got new. See, I don't want the steel sector just to go up because there's a chance of tariffs that would benefit them. I want to see some intrinsic thing. I want to see money going to the steels. I don't want to be trapped where it says, okay, and then all of a sudden people say, oh my God, tariffs. Now we've got the tariffs. That's going to be terrible for steels because of something else. There's always something lurking in the background. So I need to see that it's holding well and it's not just tariffs for the steels. We are now finally long one of the steels. We'll see how that one works out. Back we did have Reliance Steel, which did fabulously. Then we got out, never got back in. Next question. Okay. Next question I had was, could I have a look at the GBTC that we looked at yesterday? What I said yesterday is, I liked it where it was at 17 point, what was I don't remember, 17.80 something, 17 was 60. I wanted to see it move up, and today it needed to move higher and get into the 18s. Well, it did that. It's up 37 at 18.20. This is Bitcoin Fund, Investment Trust. I don't trust these, and I didn't put it for my subscribers. I'm not happy. I'm not happy about. I have to get a much better price, and I want to be holding it for a very nice move, very similar to what we had when we went to the DOD. Most people don't even know what a DOD is. The DOD is the elements, dogs of the Dow, equal weight, 10 highest yielding stocks. We've had some spectacular runs in that when we've got it right, and it's gone all the way to the top, huge moves. And we've scaled in, scaled out. I'm not in it right now. I'm just keeping my eye on it. So it's the same effect. You want to be, you can't do this overnight. This is where you want to buy it. Hopefully get a really nice position and just see it move up, even if it's just steadily. Doesn't have to be spectacular. You want, I love when we can get something and then we break away like we have for our bank stock, Bank of America or General Motors, and you got it at such a nice price that it breaks to the upside, so that every time it pulls back, it's still way over your entry price. That's the best way to have a long-term position. So let's just look at a question of MOS, which is Mosaic. I haven't looked at it for a while. Went to an E, failed. Okay, so this is A, B, C, and pulling back sharply. This is always tough for me. I've kind of stayed away from this. One of the reasons is it does some weird things, at least in terms of my work. It's one of the few stocks where, look, let me show you something. You see this spike here? It looked like D was absolutely a perfect peak D. The MACD pulled back, the stochastic plunge, the on-balance volume. And then it has this crazy move and it goes to the upside and it goes E/A, F/B, and then those terrible technicals kick in and it plunges from the 28s down to the 23s. That's 5 points. That's big for this stock, right? Now it starts a brand new move and it goes up 36, 34. So it goes peak A, right here, Mosaic daily, A, B, C, goes to the D. What do you expect at D? Other things can happen. Kaplop. It's down 108, down 3.8%. But no, it's not 3.8% because yesterday it made a higher high. So I'm a little nervous about these things. It went from 29.20 to today's low, 27.11. That's 2 points. That's 2 points in 2 days to the downside. I'm not happy about that. So Mosaic, stay away right now. I don't see anything there. Whew, that was a long way to say that. Stay away. Let's go on. We wanted to look at, did I do the dollar in this particular hour? No, I didn't. Dollar's acting very well. It's up 55 cents at 90.40. My guess is that we were long twice. We got it almost perfectly at the bottom. This time I said, third time's probably going to be lucky, but I'm just tired. I don't think I want to get back into the dollar. This is the move, the best move. I'll be right back.
You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental. So I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. And last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archive workshops where I show you the exact same patterns that earn me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of The Trader's Edge, heard here at TFNN.com.
Hi, everyone. Don't forget, Steve's coming up, Steve's show, and then you've got Dave White. You've got people guest hosting for Tom O'Brien, and I'll be back a little later for an interview, and then you've got Andy Hack. So now what we're looking at is, you see this 120-minute chart of the Dow. It's got the Chapman Wave notation of the Chapman Wave 5s. Had a 5 at 25,432, pulled back sharply to 24,792, another 5. Now we've got a 3 pulling back to a 4. So this is very important to me. We are getting the consolidation I anticipated, but we also made the new high today, the recovery high in the Dow. Still extends leg C. So I wouldn't be surprised a little choppiness remains for tomorrow, and then Thursday is going to be big. Does it break out to the upside? It's going to be very important. We want speed. If we're looking at this, what I said to subscribers is the stochastic at 94 is really strong. It should give very good support all the way to the 25,570s. What was the low today? 25,550, just a tad lower than I said to subscribers. So this is going to be very important. And the other thing is that in the daily chart, you need speed. In other words, I'd either like this to extend leg C by tomorrow, in the daily. This is on the left is the 120-minute chart. On the right is the daily. The MACD and stochastic are improving a lot. It's way above the 9-period moving average support of 25,258. What I want to see is within, gosh, it has to be Thursday. It's got to be testing this. The upper part of this candle, the ugly candle of the second, opens at 26,061, closes at 25,492. I want to see us in this left side, right side price time match, and it's got to be kind of soon. It's got to be by the 2nd of March, and we'll see what happens. So far, going to hold our long positions. The only short we have is a short that is really not acting very well at all, but it's not breaking down yet. PHM, Pulte Home, we shorted about 33.51, taking some nice profits, still have a portion left, and it's at 29. Going to be watching this one closely, because if it closes under the weekly chart of 28.33, wow, that's going to not be good for home builders. That's going to say rates could go even higher. Hey, have a great day. I'll be back a little later. Check out my opening call and check out the den. You got another free day in the den. So have a great day. See you a little later on or tomorrow.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.